So coming into the day, I saw that we don't have any news until later that day, so pretty much it's a news-free day for me, and that's perfect. Like when you want to trade, that's pretty much perfect. Where you want to have the news, it's just no news anywhere near when you are trading, especially on the lower time frames. So coming back over to the chart, you can see that we have a pretty nice demand zone right here on the Nasdaq 5-minute time frame. And as you can see, the price broke structure to the upside. We even have the 1 hour in a pretty, let me go back right now, where's the trade from yesterday, right here. So that was basically the point. We saw that the market is pretty bullish. We also can see that we broke structure to the upside right here, and for me that was pretty clear that I want to take buys for the day. So my bias was bullish already going into the day. That's always one thing I do before trading. I check the 1 hour time frame on any pair I trade. I mostly only trade Nasdaq and the S&P 500, and I saw that we are pretty bullish for today. So I scaled in Dower. This is, by the way, my analysis for today. Market open is like in a few minutes, so I have to hurry up a little bit so I don't miss out on a nice setup right here. Let me delete this. So seeing this, I was already pretty bullish, right? Then we can also see that price broke structure again right here to the upside. So we have also a valid demand setup right down here with a nice fair value gap attached to it. But however, price didn't end up reaching back into the zone. So a lot of the times this will happen to you when you trade supply and demand. Price can't reach all of the zones, like you can see right here. Price also didn't reach into that zone. That's just something that happens. But there will always be a next zone in the market, so don't try to rush it. The importance in trading supply and demand is to look at price when it's inside one of your zones, okay? So that's where your skill comes into play and your ability to run the strategy freely. So let me delete this off. And you can actually see I saw this zone right here, building from a nice wick, how I like it. And we can also see that the market has a little, just a little kind small fair value gap right here. That's also pretty important. I like my zones when they have a fair value gap attached to it, because it just shows me that there is more than just a supply zone laying down here. Okay, so once price came back into the zone, I looked very closely on the 5-minute chart. I don't scale down to the 1 minute. You could do that pretty much if you like to get a nicer entry. Maybe if you scaled lower, you could have entered right here, resulting in a higher risk reward. But I am just looking at the 5-minute time frame to keep things clear with my mind. And as I saw price reaching into the zone, we first got a pretty huge rejection from the top right here. So you can see that this bearish candle almost closed down 50% of its initial body, okay? And we also don't had a wick to the downside, so it's pretty much clear that this candle is very, very bearish, right? So new traders would assume that the price is going down, maybe someone even sold there. But me, knowing that my overall bias is bullish, I only want to take buy positions, so sales is not an option for today, and I'm waiting. And as I saw the next candle developing, opening below, and closing all the way above the previous body with a huge bullish body, I opened up my long position right here with my stop loss just below the zone. That was my confirmation that the buyers are taking control again, because the previous sellers and the huge pressure they made right here in this candle was completely vanished. The buyers took their control back right here. It's clear as day for me. And then I entered my trade, stop loss just below, and I only target a 1 to 1.5 risk to reward ratio. Guys, I am not a guy who's trying to sell you like a 1 to 8, a 1 to 2. This can work sometimes. Like for this trade, you could also went for a 1 to 2. But if you want to do that, I will highly recommend to you that you set your stop loss to break even at least at a 1 to 1 risk to reward ratio. But the reason why I only choose a 1 to 1.5 for this trade is clear. And also one thing I want to mention before we go into why a 1 to 1.5 risk reward makes sense is, as you can see, my take profit is already inside the previous leg of price action. That's also a thing I look at before I place the trade. Is a 1 to 1.5 risk to reward even realistic? Because let's say the zone would be pretty big and my stop loss had to be below here. So this would be a pretty huge demand zone, right? My take profit then has to be right here highly above price, and that's something I don't like because it's just unrealistic for price to reach this level if it's not within the last bullish leg. So if you want to take it to the extreme, this level right here could be my highest take profit because there's also liquidity sitting above this level. But for me, a 1 to 1.5 works perfectly fine, so I had my stop loss just inside this range right before the liquidity sweep even happened. And as you can see, it was a nice win, pretty nice. And now let's go over why this strategy prints money on 1,000 trades, okay? This is basically my strategy if you run it through hundreds and thousands of simulations like I've did, and you can even backtest it to see your own results. So I highly recommend also that you guys journal your trades, otherwise you don't have any numbers you can put in here. But for me, I always lose about 5% of a small account, and I take profit at 7.5% with an average win rate of 55%, and that's sometimes higher, sometimes lower, but let's say you can achieve a win rate of 55% consistently, which is not very high. It's not something any guru on trading will tell you, because this just looks low on the paper, but in reality, if you can look over here, after 100 total trades taken with a 55% win rate, you can actually see that we gained about 2k. Right here, so you can see we just won 10 wins more than losses, and that's not pretty huge, right? That's something every one of you could achieve. And if you see right here, the starting balance was 500, the win rate was 55%. After 100 trades taken based on the system, your outcome would be $2,400. If that's not insane and proving to you that this is basically, and the limit and market fees is, by the way, calculated in here that my brokerage offers me. So it's actually realistic that you come out at this variable if you take a total of 100 trades. So just stick with the strategy long enough. It doesn't need to be my strategy, but just stick with it long enough so you can see that it makes sense and you can see that it's actually profitable.